Hello everyone. In today's video, I'd like to share what's in my dividend portfolio and a little bit about my investment approach. First things first, just some disclaimer, please note that I'm not a professional investor. Please consider any information provided on this channel as entertainment purposes only. You should seek your own independent advice to check how the information you obtain from this channel relates to your personal circumstances. Just a little bit about myself. I have been investing in the financial markets for about 15 years now. During that time, I have dabbled in forex, mostly Aussie-US pair, commodities like oil and gold, stocks, ETFs, and property. When I do my analysis, I like to focus on the company's cash flows and the dividends that I'd be receiving. My goal is to eventually retire on dividend and other passive income. In late 2021, I converted all of my individual Aussie stocks into 2 broad market index ETFs, and I plan to keep buying regularly with my monthly paycheck. Okay, here's my portfolio value consisting of 3,413 shares of the IVV S&P 500 ETF and 7,804 shares of the VASASX 300 ETF. As of the end of August 2023, their market value is $869,473, while the portfolio's weighting is currently 81.7% VAS and 18.3% IVV. My target is to move towards 50-50 over time. And just to recap, the Vanguard Australian Shares Index ETF, or VAS, is one of the most popular ETF in Australia. As shown on their fact sheet here, VAS seeks to track the return of the ASX 300 index before fees, expenses, and tax. Its management fee has just been reduced in July 2023 from 0.1% per annum to 0.07%. This index captures the essence of the Australian economy, with 52% of the index in the financials and materials sectors. If we look at the table below showing the 10 largest holdings in VAS, 5 of them are banks. The Commonwealth Bank used to be the largest holding in VAS until January 2022, when BHP unified its UK and Australian listings into one on the ASX, effectively doubling its weighting from previously 5.5% to around 10% now. The other ETF in my portfolio is BlackRock's S&P 500 ETF, or IVV. IVV's investment objective is to provide investors with the performance of the S&P 500 index with a management fee of 0.04% per annum. In contrast to VAS, IVV comprises of some well-known tech stocks that have been performed very well in the last 10 years. If my VAS ETF will provide me with dividend income, IVV should provide the capital growth. I'm comfortable with this 2 ETF portfolio as fundamentally VAS and IVV aim to track the 300 and 500 largest companies by market capitalization in Australia and in the US, respectively. These broad market indices should allow me to capture market returns with low fees without the pressure of having to pick the next winners. I certainly didn't have the foresight to buy Tesla or Nvidia 10 years ago. I will also aim to hold these ETFs for the long run, further reducing the need to time when to buy or sell. What is your investing or portfolio strategy? Please let me know in the comments section below. Lastly, we will quickly revisit how the ASX 300 and S&P 500 indices have performed in August and in the last 10 years. In this chart, we see that the ASX 300's total return including dividends fell 0.76% in August, while the S&P 500's total return in Aussie dollar terms rose by 2.4%. This last chart compares those 2 indices' total return over the last 10 years. Including dividends, the S&P 500 has returned 16% per year on average, while the Aussie ASX 300 returned only around 8% per year on average, driven by the returns of tech stocks such as Apple, Microsoft, Amazon, Tesla, Alphabet, and Meta. US stocks returns in the last 10 years have indeed been incredible, although we should note that the past is not indicative of future performance. That will be it for this Mints update. Thank you for watching. If you like my video, please like, share, and subscribe to help me grow my channel.